Good afternoon, traders. Today is the 1st of June 2017. Today was a great trading day with good volatility, and it was very good day. Okay, the software was giving great signals. You know, like we're gonna be reviewing the signals along with what happened today. Okay. So let's start over here. The market was waving to the upside, okay, and when the market opened, and then there was two exhaustion patterns in the top of the outer bands. Lots of divergence to the downside. Was very quickly. Then the market just tanked. Okay, we entered with six lots to the downside, and we exit over here. More than 40 ticks, and it's like more than over $1,000. Was a great day because we saw this information, and then we confirmed with the correlator. At the time, correlator was red. Okay, so remember with this correlator over here with this timing sales, we can correlate and funnel the orders from the Russell, the Nasdaq, and the YM. So those are the more consistent, because the S&P 500 trades too many lots and it doesn't move, so it's just noise. So we get the information from the ones that move more. Okay, so the Russell moves a lot. Has lots of volatility. That's what I mean when it moves a lot. So it's not like the S&P 500. Sometimes the S&P 500 doesn't even move. Okay, so there's lots of trades taking place, but can't really you can't really take decisions based out of that. So we just stick with the Dow, the Russell, and the Nasdaq. Okay. So as we continue over here, and the market did a triple top over here, and the well continued to the downside. He had faith that the market was going to go down, as this selling over here was very extreme, as we can see over here. Look at this. This is a lot of trades taking place in a very fast way, very aggressive. And look at the buying over here. It was too shallow. As you can see, it's very shallow. And well, the selling continues to the downside, as you can see over here. More selling, more selling. And this is the bid ask. Okay, so this is real time selling and buying. So you can see what's going on in real time. Okay, so we have a print over here. Maybe you can see this E. This E over here. This is an extreme order book. Okay, and this is a reading from the order book. Okay, so when it makes in this type of prints, I have said it before in my other videos, so you can check them out. Okay, this is a reversal. This is a reversal. So we prepare to have confirmation. Okay, there's nothing like it's written in stone. So don't take, like I say, don't take everything for granted. Okay, we can see the market is falling over here. We can see bullish divergence, bullish divergence, bullish it means the market doesn't want to go anymore lower anymore. Okay, there's gonna be a change in trend. Okay, so over here, look, you can see this red wicks is from the correlator. As you can see, the correlator maybe was very red to the downside, correlating the three markets that I mentioned before: the Dow, the Russell, and the Nasdaq. Okay, so that's the only three markets I care about. So well, the market returned to the upside. Okay, and then the market making exhaustion and two prints from divergence. And well, this was a short trade, but if you took it, you could have made some money. Okay, but then the market went to the lower bands, or part of the bands. Okay, we have two exhaustions. This means that there's no more sellers over here. It's drying. Okay, you use your logic. You know what's going on. You know what can happen. Okay, the market took the upside, 30 ticks to the upside, then hit this resistance over here. Okay, resistance. Well, the market just got like a little bit tired of pushing. No more buyers. It goes to the downside. Then, as you can see, this wicks over here, red wicks. This was the order flow. Okay, the the correlator over here. The three sisters tried to push the market to the downside. They got trapped. These institutional traders, we're just like sardines to them. We are fish to them. They just eat us completely. Okay, they got absorbed over here and they start pushing the market to the upside. So you can see the speed. Remember, this is from the order book. I already spoke about this in the other videos. This speed means that the high frequency traders are showing their heads up. So we already know that these guys are trading today. So it's very important to be aware that the moves are going to be big. Okay. So this is a heads up for you to understand what's going on. Okay, the market make over here some top and didn't move to the downside. Okay, remember the E over here. This is an extreme. Okay, it's a reversal. Okay, so over here we couldn't do nothing. This is no man's land after that big short in the morning. It's very difficult to really have a clear sense of what's going on. This is noise, 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 noise over here. Well, the market never lost its trend. Okay, we have exhaustion, but they never made those big sells, that we see in the morning. Until over here, we saw a big sell, but that's just profit taking. Okay, we see maybe you can barely see it over here. Here's another P. Here's another push from the high frequency traders. Okay, we have a order book momentum to the upside, and we see a P. There's a 30 ticks. Okay, so you can go in when you see this type of patterns with trend, not counter trending. So well, I don't know if you could have been trading later on because the market just got a little bit very, very tough. Like I always tell you, how much money do you need? How much do you really need? $300, $500 in that sell-off in the morning, you could have made more than enough. Okay. Well, if you took the other pullbacks the other reversals to the upside, you could have made another $200, $300, $500. It's more than enough. Okay. You just can't be gambling over here, trying to catch these trends, because the majority of the people in less than 1 hour of trading, they already took their money and they are going out with their families or just going to the gym, and you're still caught up over here trading. So it's a no-brainer. Just stop. Just quit. Okay. If you keep on doing it, it's gambling because the traders they leave. They leave you up with this crazy automated trading system that they just gonna eat you, gonna eat all your money. Okay, so it's a waste of time. It makes no sense. Okay, the market made some divergence over here, but we see some selling over here. Like I told you, it doesn't make sense. I wouldn't even think about taking a trade over here. Look at these guys there; they're all over the place. This is a piece from the order book from the high frequency trader. So these are the guys that are making all this noise over here. Look at them. They're just trying to hook you up and making you think. They're trying to put you into a bull trap, in a bear trap, because they may make you think that they're gonna drop the price or they're gonna push the market to the upside, and they don't do it. So, and that gives you that choppiness, and they start eating you $100 over here, $100 over there, $100. When you look at it, when you realize you're gonna be losing $1,000 or more, and you're gonna be frustrated, and you're gonna be doing revenge trading. Okay, so just quit. When you see all these wicks and all that, like I tell you, it's these guys over here. You can identify them over here with this piece. The P's are very important because if you gotta be aware, they put you in control of your mind. They tell you, careful, there's sharks over here. Okay, so just make your trades very accurate so you don't get involved in a bad trade. Look at him over here. See the P over here. Okay, so these guys are very powerful. They got a lot of money. So just trade when the market is making like I told you, when we have a lot of participants, not when the people is already going out for breakfast. Or, to Walmart or something like that. Or you just don't keep on trading because you're gonna lose all your money. Okay, guys. So let's see what else. What else do I have? Let me check. Okay. Let me see. We have the crude oil over here. Let's see crude oil. Okay. This is crude oil. Well, this is the market open over here. Well, we have bullish divergence. I didn't take this um, from that sell-off from yesterday. Was the market can be a little shady, but well, it was smooth, a good trade. Well, it makes a pullback. Still, I don't feel confident. Well, I just saw this bearish divergence. I let the market go to the upper side of the bands to see exhaustion over here. I took the trade, as you can see over here, and covered over here a bit, then sold a little bit more and covered over here. Okay, but there was a lot of bullish divergence. For me, that was more than enough. Okay, so as you can see over here, there was bullishness, and there's red wicks over here. This is trap traders. Okay, so well, market made some double bottom over here. Okay, so the market took off to the upside. If we can see the green wicks over here, was very strong to the upside. This is the correlator over here. This is correlating the Canadian dollar and crude oil. Okay, so in the order flow, so we can see what's going on. Okay, so you can see green, green, green. Yes, was very strong, very, very strong to the upside. It was a no-brainer. You could have seen this in the morning when the market was trading live. You could have seen the market. It was crazy. It was very strong. As you can see, the time frame 97, 907, 908, 999. Okay, it was very fast, very fast. Okay, so after that, let's check over here. Okay, we saw exhaustion over here. Okay, let's see. Well, the market did some divergence. It started from over here, over here, over here. Okay, but nothing happened. They decided to throw it down here. Okay, I couldn't have taken that straight because too much indecision. Like I always tell you, just trade a little bit and that's it. Okay, don't just keep on and on because you're gonna lose your money. Okay, there was bullish divergence near the bands over here. Then the market pulled out to the outside. Very cool. Okay, so it made almost a triple top over here. Bearish divergence. Okay, well, market started to tank. Okay, you could have seen this in the timing sales. It was very, very strong in the red. And well, we thought over here the market was going to bounce because of the closing, and we got a little bit of profit, but well, the market just took a dive and we lost that trade. Then we took a trade to the downside just to recoup a little bit because the market was very strong. As you can see over here, the bid ask over here, maybe you can take a screenshot over here in your eyes of what's going on. It was very red, as you can see over here. So there was no buying. Okay, it was very red, and the market took a dive. We took like 20 ticks over here. It's more than the 3 contracts. It's more than enough. Okay, so well, the market closed. It continued to the downside, but you cannot take every trade because you never know these machines. They can go, they can turn in a dime. So it's very difficult to trade those markets. Once you get a little bit, just get out because this guy can turn and go 40 ticks against you, even if you're in green, and you can lose the money. So greed over here is you got to be very careful with greed. So don't be too greedy or else you're going to lose your pants. Okay, guys. So, well, that's it for crude oil for today. Let's see. Some people was asking me that why I don't use Renko charts. I don't really use Renko charts because I cannot see the price action like I always tell people. I really like to see the price action. Okay, so that's why I don't really use Renko charts. But here it is, as you can see. Okay, so it's almost this is the morning, like we said, crude oil in the morning. Well, it was a little bit shady. Okay, now we have bullish divergence from here, well, you could have taken the trade over here and ride it all to the top. It was bearish divergence, bullish divergence over here. Okay, then over here the drop. Okay, but this is just the to illustration purposes. Okay, just for you to look at how it looks in a Renko chart. Okay, let's see. And here is the Nasdaq in a Renko chart too. So you can see the volatility in the Nasdaq is very strong. So that's why I always prefer to trade the Nasdaq. Okay, it's got very strong moves, and I think it's more than enough. It's more than enough. Okay, we don't see the extreme order book here because we already, it's real time. So this is just an after the close chart. So okay, over here, so you can see the prints. You can see the prints over here, bullish divergence over here. You can see the selling, but the market never really pulled off, just to go to the extreme or outside the bands. Okay, if the market goes outside the bands, it's okay because you can take a trade. Maybe this one got a little bit closer to the bands. Still, I wouldn't have taken. Yeah, just like this one. This is a good trade. Okay, over here. This is okay. It's like 80 ticks. It's a lot of money. Okay, guys. So, well, that's it for today. I'm signing off for you to bring you today this review. Okay, if you can use this software too to trade binary options. You can do indices. You can trade the indices, or you can trade the gold. You can trade the crude. You can trade the Nasdaq, Apple, IBM. There's a lot of instruments that can be used instead of using the instruments that have volume. Okay, those currencies pairs, they don't have volume. You're like a flashlight without batteries. You never know what's going on in those markets. Okay, so I don't think it's a great idea, but you can trade binary options too. This software can work for you. We can do a template for you for just to trade binary options. Okay, so okay, guys, this is all for today. Okay, signing off, and have a great afternoon, and see you tomorrow. Bye bye.